Good evening, everyone. I am You're welcome to today's class. I'm late. My host, kindly confirm you can hear me and see my screen.
Please go ahead.
Okay, thank you very much. Um, okay. Please, I want us to just wait for about 2 minutes for other students to join us before we commence the class. So by 7:33 on the dot, we'll commence the class. Thank you. All right. You're all welcome to today's class on taxation. Once again, I'm Adesua Isadekere, and we'll begin. But I just want to read our class rules for today's class. So all students should ensure that their audio and video are muted just to allow for proper coordination. So at any point, just ensure your audio and your video it's muted to avoid distractions in class. But in case you're experiencing network issues, probably you're unable to hear me, the lecturer, or you're probably logged out and unable to log in, just go to the WhatsApp group and send a message, and the host will attend to you immediately. Then you can also make use of the chat button, okay? When you have, during the course of the lectures, if you have any questions, kindly send your questions. And please, your questions should be sent, your questions or any information you send on the chat button should be cordial and professional, especially with the use of language. All students are advised to listen attentively during the lectures. I would advise you get a notepad and a pen, okay, so you could jot as the class go on. And you're free to call me at any point in time between now and your exams day to ask for questions, if you have questions or clarifications outside our normal lectures. So I will just want to call my phone number. You can reach me on 081-866-53263. So for today, we'll be looking at withholding tax and luxury tax. But before then, I just want to talk about our taxation exam. Next week is the ICANN, the scheduled date for ICANN examination. And I believe at least by now we should be at least 90% ready for the forthcoming exam. So let me just talk about the taxation exam briefly. For taxation examination, the new syllabus was introduced in began in November 2019, and it was adjusted compared to the previous taxation exams we'll be having. So for taxation exam, there are two sections. We have the section A and then the section B. For the section A, you'll be given multi-choice questions, which is 20. The multi-choice questions, you have questions and you have options, more like what we call objectives. Okay, so you're expected to attempt all 20 questions, which is 1 mark each. So you have 20 marks in section A. Then for section B, you have a total of 6 questions and you're expected to attempt at least 4 questions. The section B is a theory section, both mixed with both calculations and normal calculation and normal theory questions. So you have 6 questions. You're expected to attempt 4 questions, and each of those 4 questions are 20 marks question each. So for section B, you have a total of 20 marks in addition to section A, which will give you a total of 100 marks. So I always get to advise students to try and get at least 19/20 in section A because they are straightforward questions. But most importantly, this section A, most in section A, most of the questions are usually what theory questions, and we realize that a lot of tax students just focus on the calculation alone without getting to read the theory aspects of the course. So it's important for you to go through or at least 90% of the taxation syllabus for ICANN as it's stated in the ICANN pack. Okay, so topics like taxation, returns, assessments, collection procedures. The new topics have also been introduced: basic ethical issues in taxation, national tax policy, okay, then previous topics: tax administration in Nigeria, your withholding tax, value added tax. We also have luxury tax was introduced, okay, then stamp duties, customs and excise duties. So just ensure you have an idea, you know the theory aspect of those questions, because that will be the composition of section A. So if you know those parts very well, it's very easy to get your 20 marks free. Then your section B, you can then attempt and get at least 60/80. Okay, so it's very easy. So for today, in our previous class, we looked at value added tax, and we also looked at returns, assessments, and collection period. We talked about returns, when our companies are expected to file their returns on an annual basis. And we said all companies in Nigeria are expected to file their returns on an annual basis. And in filing their returns, 3 main documents are required: the self-assessment forms, the audited financial statement of the company, audited accounts of the company for the current period that they are of assessment, currency of assessment. Then in addition, there was tax computation and capital allowance. So with these 3 documents, the company can go to what? FRS and file for their tax return. Then in addition to that, they are expected to also make payment of what? Of their tax. For FRS, you're allowed to pay your tax due at once, or you can also pay in what? Installments, but the maximum number of installments is 6 installments when you're paying your what? For tax. Then in addition to that, we looked at the penalties. What are the penalties if you do not file your tax? But first and foremost, for a new company, if it's a new company, you're expected to file your tax within 6 months of commencement of business. Okay, 6 months of commencement of business, or what? Or 18 months after the date of what? Incorporation of business, whichever comes first, you're expected to file. Or if it's an existing business, you're expected to file for your tax 6 months after the accounting period of the organization. For instance, we have FCA Limited, okay? And FCA Limited is a company which accounting year runs from January 1st to December 31st of every year. So what it means is that for 2018 year of assessment, if it's an existing company, we already know that the tax, we already know that the tax law says that it will be based on what? Preceding year basis. So if we are computing 2018 year of assessment, okay, which means in 2019, from January 31st, 2018 to December 31st, 2018, that's the what? Accounting year. Between January 1st, 2019 and June 30th, 2019, the company is expected to file their tax returns towards FIRS. That means for an existing company within 6 months after the end of the accounting period. Okay, the company may not use the accounting period will differ with what's different organization. Then we also talked about collection period. When are you expected to pay different form of what? Of tax. We looked at value added tax, and I said for value added tax in the previous class also, for value added tax, value added tax is a consumption tax, okay? Multi-staged form of tax is for value added tax. We have what we VAT is charged on purchases of goods and services. So in that case, every company or organization expected to have what? A VAT account. So in a given month, they'll have what? A VAT account drawn out. They have the debit side and the credit side. For every VAT that is charged on purchases of items, it will be what's debited in the VAT. It will be on the debit side of the VAT account. Then if there are sales during the course of the month, when VAT are charged on invoice, when a company is giving an invoice to an organization, when a company is giving an invoice to an organization, you'll have the actual cost of the products. Then in addition, you now have value added tax. So the VAT charged on the sales is what will be given to is what will come to the credit side of the VAT account. At the end of the day, if there's a balance, by the time you do your debit, calculate your debit and your credit side, if there's a balance, that's what called the VAT. The VAT, that amount to be paid is the amount payable to FIRS at the end of the month. However, if you do not have any amount payable to FIRS or the amount, okay, thank you very much. Yes, I'm still on page 2 because I'm doing a recap of what we discussed in the previous class. So that's all we discussed for value added tax and returns assessment and collection period. So for today, we'll be looking at withholding tax and luxury tax. When we say withholding tax, what is withholding tax? Okay, withholding tax is a tax deducted at source from payments made to a taxable person for the supply of goods and services. So for withholding tax, it's simply an advance payment of tax. Okay, the reason why it's called an advance payment of tax is because this is a form of taxation. It's when withholding tax is charged on goods and services. Is charged on goods and services. You can also use the tax to offset your future tax liability. at a given period of time. I will explain that in detail soon. So it's simply an advance payment of tax, as the withholding tax deducted as such is offsettable against any subsequent tax liability that may be due in respect of what other incomes. So for withholding tax, for part of the peculiarities of withholding tax, okay, what makes withholding tax distinct from other form of taxation is that the taxpayer has no option as to whether to pay for it or not. That option is, for example, we come to contracts. For example, most contracts before instance, okay, for you to raise within. If you have any questions as the class is ongoing, kindly send them to the chat button or any observation, and I'll attend to it as soon as possible. Okay, thank you very much. So as I was saying, for withholding tax, the taxpayer have no what option. So if, for instance, a contractor supplies goods to a government agency, let's say they supply furniture to a particular government or parastatal, at the end to be paid, what the government parastatal, what the government parastatal will do first and foremost is that they will deduct what value added tax on the income, and they will also deduct what withholding tax from the amount payable to the contractor. The net amount is what will be paid to the contractor, the one who supplied the goods or what services to the government parastatal. So the taxpayer have no other option. The amount that will be received at the end of the day is the net amount. And for value added tax, I forgot to mention, for value added tax was previously 5%, but currently, from the new introduction of the new finance bill, value added tax is now the rate of 7.5%. And we know it's charged monthly or towards FRS. But for withholding tax is different. Withholding tax is one of, as the income is about, before paying the income to the receiver, you have to net off value added tax and net off withholding tax. Yes, secondly, another peculiarity of withholding tax is that it is an advance payment of income tax, and it can be utilized as tax credit against income tax liability of the year to which the income rates. What it means here is that for any individual, okay, or a company that pays withholding tax on any income that is expected to receive, the individual or company can also use the withholding tax to reduce its tax liability at the end of a period. Let me give an example, okay, using FCA Limited. For 2018, let's say FCA is into the business of general contracts. They supply goods, they render service, just general contracts. And then there's a particular agency named IBEX. So while carrying out contracts for IBEX in 2018, during the period of 2018, FCA had a contract of 2 million naira with IBEX company, with IBEX. So at the end of the contract, FCA is expected to receive the amount. Before IBEX to pay FCA, IBEX will net off withholding tax on what contracts. And as you can see my table here, if you look at if you go to contract supply, if FCA Limited is a company, so what it means is that IBEX will deduct 5% out of 2 million naira as form of withholding tax for that income. So what they will pay me will be net of 95%. That's what will be paid towards FCA Limited. At the year, which is 2018, okay, In 2019, between January and to June, by the time the FCA Limited has what completed his done his audited accounts, okay, and then the tax consultant goes ahead to do the tax computation. Let's say we realize that FCA is to pay tax liability of 30,000 naira at the end of the month, at the end of for 2018 year of assessment. So what FCA can do is that because FCA has what been deduct 5% have been deducted for withholding tax. What FRS do, immediately IBEX as a company remits that withholding tax to FRS. Now the system has actually changed because everything is done, has been computerized. So immediately IBEX remits the money to FRS. FRS will send a withholding tax credit to what? To FCA. FCA will receive it in the company's email address. Okay, so what FCA will do is that FCA will go ahead to print out all the withholding tax credits that has been received for the year 2018. At the end of the day, before paying your income tax, you have to attach your withholding tax credits receipt as evidence. That amount, let's say our withholding tax credit, total withholding tax for that year was 10,000 naira. So you deduct 30,000 naira from 10,000 naira. The total amount that you will pay to FRS will be what? 20,000 naira. So that's how it happens. For withholding tax also, it represents the final tax in certain cases. So this is a schedule, this is a table, okay? We have different form of transactions, we have different rates, we have the tax authority and the tax remittance. For companies, their tax authorities are FRS when it comes to withholding tax, while for individuals, the tax authority is the State Inland Revenue Service, where the recipient is resident. For instance, the example I've been using so far, using FCA Limited, let's say FCA Limited is resident in Lagos State. Okay, FCA is a company. Let's use IBEX, using IBEX as the one who gave out the contract to FCA Limited. Okay, let's say if IBEX is an individual, all right, that's registered with a business name. Okay, definitely, you know, the tax authority for IBEX is the State Internal Revenue Service. So IBEX as an individual, if IBEX is to remit withholding tax, it has to be remitted to the state of residence. And the state of residence in the example is what? Lagos State. I hope you understand that. So we have different form of transactions. Okay. Someone say he can't hear me well. Okay. Can you hear me clearly now? Can you hear me clearly now? Okay. In case you can't hear me at all, just kindly click join audio on the left hand side of your screen.
Prof, we can hear you.
Okay, thank you. You can hear me clearly. Thank you. So let's continue. So this is a schedule. There are different type of transactions that withholding tax is charged on. We have royalties, we have rents, we have dividend. For royalties, if it's company, the rate is 10%. For individuals, it's also 10%. For rents, it's 10%. For individuals, it's also 10%. For dividends, 10%, 10% each. So what it means that the rate for companies and the rate for individuals are the same. For interest, 10% each. For commission, for companies is 10%, for individuals is 5%. Consultancy, 10%, 5%. So for your taxation examination, for your exam, you can be asked for the various type of transactions that withholding tax, the various sources of income, let me put it that way, the various sources of income that withholding tax can be charged on. So these are the sources of income: rents, dividends, interests, okay, commission, consultancy fees, technical fees, management fees, directors fees, building construction, contracts, supply. Okay, so that's for that. However, for individuals, okay, for those that their tax authority at the State Internal Revenue Service, those are resident in Federal Capital Territory, and they also have non-resident individuals in Nigeria. okay? But they are earning their income abroad. Their withholding tax is payable towards FIRS. Those are residents of FCT, and those are non-resident individuals in Nigeria. Their tax authority is what? FIRS. They pay their withholding tax towards FIRS. Then we also have those are members of Nigerian Armed Forces and Police, officers of the Nigerian Foreign Service, and persons resident outside of Nigeria who derive their income in Nigeria. Their withholding tax is also payable towards FIRS. Then withholding taxes on dividends, interest, rents, and royalties. Those are four sources of income we've mentioned earlier. When these sources of income are charged with withholding tax. Withholding tax for if they are suffered by non-residents, those are non-residents here in Nigeria. Okay, those sources of income are the final. Withholding tax is the final tax on such source of what income. Also, withholding tax on interest and dividends is final tax for individuals. Okay, so let's move on. Say, let me just really shorten. Taxes are to be withheld from payments due to corporate bodies and individual at the rates listed in its table above and remitted. Okay, so all once withholding tax is deducted from any source of income, the individual or company is expected to remit towards FRS within 30 days from the date that the amount was deducted. So that's the date for withholding tax. You're expected to remit within 30 days from the date the amount was deducted from that source of income. All right, so let's move on. Are there penalties for withholding tax? Yes, there are penalties for withholding tax. Okay, if if a company, if a company or an individual fails to having deducted withholding tax from a source of income and fails to remit to the board, either FRS or SRS, within 21 days from the date of that the payment was deducted, they are guilty of an offense because they have deducted, and but after deducting they have not remitted that amount to what the withholding tax amounts to FRS or SRS. They are to pay, they are liable to a penalty of what 10% per annum of the tax withheld or not remitted. So 10% per annum of the total tax that has been withheld by that individual or by the company. And if they also fail to deduct or having deducted, fail to remit to what? To FRS or SRS, payments made towards individual is also a punishable, or there's also a punishable penalty of a conviction with a fine of about 5,000 naira, in addition to the 10% per annum tax. 10% per annum of the tax that is what withheld. Then if there's any interest at the prevailing commercial rate, that's at the rate of what the rates given by what CBN. Okay, so you have the interest and the prevailing commercial rates. You also have what a fine of what 5,000 naira, and in addition a penalty of what 10% per annum of the tax withheld or not what remitted. Therefore, withholding tax rates usually for withholding tax rates and double taxation. Okay, excuse me. Okay, for withholding tax rates and double taxation. For double taxation relief, it was introduced in order to avoid a company or an individual from being taxed what more than once. Okay, so what happens that most countries, especially Nigeria here, we have what we call the double taxation words treaty between Nigeria and what and other countries. So the reason why this double taxation treaty um exists between Nigeria and other countries is to what reduce to ensure that some form of what income earned by individuals that are residents or non-residents within both countries. Okay, some of their incomes are not charged more than what ones. So for Nigeria, there are different countries that Nigeria has signed the double taxation treaty with. We have Canada, Czech Republic, France, Netherlands, Pakistan. This question can also come up in your multi-choice question. So just try to have an idea of the various countries that Nigeria has signed double taxation treaty with: Netherlands, Pakistan, Romania, United Kingdom, South Africa, Philippines. So if there's any income that is earned in Nigeria, will be entitled to double taxation relief at the rate contained in the double taxation treaty. So it depends on the rate that has been agreed between Nigeria and these other countries here. So the withholding tax rate is reduced to 7.5% for dividends, for interest and royalty, for receipts of a country that has double taxation treaty with Nigeria. So it's reduced to 7.5% on these incomes for dividend, for interest, and for what? Royalties. Okay, what's the currency for deduction of withholding tax? This for currency for of deduction, this applies to both withholding tax and value added tax. Okay, currency of transaction is the currency in which tax is to be deducted and paid to the relevant tax authority. If the transaction is in a foreign currency, the tax that is to be withheld in the foreign currency, the tax is to be withheld in foreign currency and paid to the relevant tax authority. So what this means is that for currency of what? For the currency of deduction is based on the currency of the transaction. If it's value added tax or withholding tax, the currency of this tax to be paid to the relevant tax authority has to be the currency of the transaction. If the transaction was done in a foreign currency, for example, we have dollars, the value added tax or withholding tax deducted has to be in that currency, which is dollars. So you pay the tax in that particular currency. After payment of the tax in particular currency to FRS or SRS, excuse me, what CBN will now do is that they will use the current exchange rates with CBN to convert the money towards Naira and pay the relevant tax authority. But when making payments to each of the tax authority or the amount to be deducted, it has to be in the currency of the transaction. Okay. Then for withholding tax, we call them agents of government. Okay, agents of government or individuals, those that actually would deduct withholding tax from various sources of income, like we've mentioned for some companies where we have dividends, for contract supplies, consultancy fee, and so on and so forth. So those that act as agents, any company can be an agent as long as the company is deducting withholding tax from a particular income, but is expected to remit to FRS or SRS in the case of an individual. So for withholding tax, how is withholding tax being remitted? There's usually what we call for the payment is made with check. Okay, so it's paid to the relevant revenue service. It must be accompanied with a payment schedule. The payment schedule must have a list of all the names of individuals or company that withholding tax has been deducted from their incomes. So the total amount to be will be on the check. The payment schedule must contain the following information. The schedule must have the name of the taxpayers who have suffered withholding tax, their addresses, the nature of their activity, their tax identification number, their tax identification number, the individual or the company, the total amount payable, okay, the total amount payable, the rate of tax applied, then the amount of tax withheld Okay, the rate of tax applied, that for withholding tax is not fixed. It depends on the source of income, and it also depends on if it's a company or it's an individual. Then the amount of tax withheld, the balance paid to the taxpayer, the net amount paid to the taxpayer will also be included in the payment schedule. Then the tax contract for which returns were being made, the date of payment, and the check number and date. So from the schedule, after having all of these details, the total withholding tax on that particular schedule will be the same amount that will be on the check. And then the taxpayer can then go to the bank to make such payments to the relevant tax authority. Okay, so we have what we call the withholding tax credit note. I've mentioned it earlier during the course of the class. I mentioned that withholding tax is an advanced form of tax, and it can be used to reduce the tax liability of a company or an individual at the end of a given of an accessible period. Okay, so for withholding tax credit notes, when payment is made to the bank or the withholding tax section of the revenue service, okay, the FRS will issue, if it's a company, the FRS will issue what we call credit notes in favor of the taxpayer whose names are contained in the withholding tax schedule. So the credit notes are to be forwarded by the collection agent to the taxpayer. That was previously, but now once the taxpayer goes to the tax office, okay, to submit the schedule and the teller receipt from the bank, okay, what they'll do is that FRS now, they'll send the withholding tax credit directly to the official email account of the company. So if SCA Limited has done, the previous example I gave, has done a transaction with IBEX as a contractor, okay, so once IBEX remit withholding tax to FRS will send a mail to me, to my company account, and in the mail I'll see the receipts showing that IBEX has paid withholding tax on my behalf, because that amount was deducted from my total gross income that was expected to be payable to me. So all the details will be on my credit receipts. It's those receipts that will print out at the end of the period and use to offset my total tax liability. So it's important to emphasize that the presentation of a letter from the collection agent showing that the taxpayer suffered deduction, so that the taxpayer, whoever is paying on your behalf, must have a presentation of a letter as an evidence that he or she has remitted withholding tax on your behalf. Then we have what we call the payment certificate and treasury. A payment certificate is issued in favor of the tax agent. So those tax agents that remit to the relevant tax authority, they usually receive what we call a payment certificate. That's their evidence of payment. So when payments are made to the tax office, in respect of withholding tax, they are deducted at source, and then the certificate is their only documentary evidence that the tax agent would have pending the issuance of inland revenue withholding tax receipts. So most companies, should I say most? Okay, some companies withholding tax would have been deducted on their income, but they do not get receipts from FRS. Okay, what you do, you can go ahead to call the companies or the individuals that deducted withholding, because withholding tax is actually your right. It's your right, because if that amount has been deducted from any of your income to be received, you are expected to get a withholding tax credit note. We are not getting such tax credit note from child to the company. If they actually claim that they have made such payment, they should show you a what? Their payment certificate. So with the payment certificate, you can then go to the premises or the relevant tax authority and request for your withholding tax credit. Okay. So for okay, let's move on. Where it is proved that the person who suffered a withholding tax deduction is not liable to income tax for the year. Okay, let's say the individual or the company is not expected to pay income tax for the year, but the person has suffered withholding tax with deduction, or that the tax withheld is in essence of the what? Tax assessed. For instance, the withholding tax is 30,000 naira, and the current tax, the withholding tax 30,000 naira, and the company is not expected to pay any tax liability for that current year, or the withholding tax is 13,000 naira and the tax liability of that company for the current year is 10,000 naira. So you see that the withholding tax, by the time they use the withholding tax to mill off the tax liability, they also refund the money in cash to the taxpayer. So the board has the obligation to grant a refund of the overpayment to the taxpayer. But in practice, anyway, they won't do a refund. So what they do is that any withholding tax can be refunded within 90 days of the application. So you have to you just you write it to the return, your evidence was a credit. So that could probably be used in the near future. They will approve it. That'll be your evidence, and that amount can be used to tax liability for the following year. So we have what the mention that okay, that these ministries, and other agencies, okay, they okay, I'm sorry for that. Okay, for that parastatals and agents of government, I mentioned before that these ministries, they are okay in terms of as agents for the rest, because they mostly in the deduction of the withholding tax, contract sums payable to their contract. And they also act as agents in the collection of what value added tax on payments made to contractors. These tax are different. They are by these laws, by these to the relevant tax authority. So what are the, let's move on to the rights and of taxpayers. So for some rights and obligations of the taxpayers. Any taxpayer, okay, also the amount has been deducted from and the tax is also relevant tax authority. The evidence should be the original receipt issued by the relevant tax authority. So that's the one that is received by the taxpayer in its email, or if it's an individual, you also receive it. As long as the authority has the email of the company or the individual, you get the withholding tax mail address. Oh, sorry about that. My network interrupted. So let's continue, please. So like I mentioned, that's the rights and the obligation of the what taxpayer. Then in completing the annual tax return, the taxpayer is obliged to disclose his income from all sources and claim the tax reliefs that are due to him. Okay, so if you fail to declare your taxpayer fails to declare its source of its all its sources, even you're expected to declare sources of income, even income is exempted from tax. You just have ensure that tax authority do not think you are evading form of tax. All sources of income are expected to be what to be all your sources of income are expected to be declared. Declare your sources of income tax. Are there advantages? Yes, there are advantages of what withholding tax. So for taxation generally, one of the main advantages that is a source of a government what revenue for taxation. Okay, this helps to increase the revenue generation for government. Okay. By roping in persons who were previously unknown to the tax authority. So with withholding tax, okay, with withholding tax, what avoid taxation as long as they carry out what contracts. Okay, remember withholding tax is deducted at source. So the amount is deducted before what? Before the form of that tax is deducted before the net amount is paid to the taxpayer. With that of road the tax authorities. All right. Then it also helps to determine a person's turnover and thus as the current income for tax purpose. With the payment schedule, when the payment schedules are submitted by those agents to the relevant tax authority, okay, they can have an idea of the total what income generated by these companies or what individuals based on their various or based on the various income that withholding tax has been deducted from. Who may not have to bother himself going to the tax office to pay his tax. So for withholding tax, you do not need to stress yourself. Whichever agent that you're receiving the income from would have deducted it. So the agent will be the one to remit the necessary to remit withholding tax to the relevant tax authority. And for withholding tax, it also helps to reduce the incidence of tax evasion, which is quite important, like I've mentioned before. Then it involves little or no cost of collection, and it is self-accounting in nature. It's very easy to calculate. Any agent can easily calculate withholding tax. Then it also saves time for the revenue officers to attend to other duties. Are there disadvantages of withholding tax? Yes, there are. So let's just take a look at a few disadvantages. Okay, it's a high rate of withholding tax is likely to affect the operational performance of more businesses. The taxpayers receive net amount of their income, and this may likely affect the cash inflow of the to be received by a company. Is a company is expecting an income of what, of 2 million naira each, or let's just say an aggregate of 10 million naira based on different contracts. A company that is involved with what contracts. Okay, so at the end of the day, is the net amount that will be paid to the company. The later has been the amount, the income received will be more. Okay, and the company or the individual, okay, who carries business will have enough cash inflow for its operation of its business. So that's one of the likely disadvantage, that it affects the what, it reduces the cash inflow available to the company or individuals, and it may affect its operational performance of its businesses. The another is that the application of withholding tax affects the cash flow. Okay, that's part of the disadvantage. It is likely to discourage hard work by revenue officers, self-accounting in what nature. So it's really one of the advantages that it's really can discourage hard work on the parts of what revenue officers, especially those in the department they wait for the agents, okay, to come to the office, tax of what means the tax of accounting. So too simple, withholding tax is being not charged. So first we'll be looking at Asseyo Insurance PLC. Okay, this company is engaging in the services of Desu Consulting Limited in line. And strategic management in line with the ongoing recapitalization exercise within the insurance industry in Nigeria. Okay, so the fee of the assignment is 65 million. This is an insurance, the services of Desu Consulting Limited. So they are doing the new mega insurance. Asseyo Insurance paid the agreed fee on 30th June 2013, upon which no withholding tax was deducted. What is the tax implication of this action? So looking at this alone, okay, first and foremost, the requirement specifically asking for the tax implication of its action. So since the company did not remit withholding tax on the income, okay, what it means is that this company is liable to a penalty. So the tax implication of Asseyo Insurance is failure to deduct according to Section 82 of Company Income Tax Act 2014. What it means that this company is liable to a penalty for not deducting and remitting to FIRS. So the tax implication is that it's liable to a penalty of 10% of the tax not withheld or not remitted, in addition to the payment of taxes itself. So the penalty is 10%. So what's 10% of the tax not remitted? What's 10%? 10% of the income, first and foremost. So the withholding tax rate is 10%. Okay, so 10% of 65 million naira, you have 6,500 naira. So if this company has actually deducted deducted withholding tax and remitted immediately, the company would have paid, the taxpayer would have made a payment of 6,500,000 as a withholding tax to the relevant tax authority. But on failure to, the taxpayer will be also the taxpayer will be the agent will pay a penalty for failure towards deduct. What's the penalty for failure to deduct? For failing to deduct, will pay what 10% of the amount per annum. So 10% of what 6,500,000, which is the withholding tax. 10% of it is was 650,000 naira. So the total payment for Ashai insurance 150,000 naira or remits or what failure to deduct or remit the withholding tax liability. Okay, so let's look at another example. We have Adebola Nigeria Limited. So Adebola Nigeria Limited has been many years. Water. Okay, I'm back. Sorry for that. So for second exercise, okay, we have then before I proceed before I continue to the second exercise, another way which withholding tax, I have a question on company cost in the quest sources of incomes. Okay, so in your requirement, in the required section of the question, one of the required may be for you to calculate the withholding tax on various sources of income that you can charge withholding tax on. So that's why it's important for you to know the what the various sources of income withholding tax can be charged on. So you look out for those sources of income in the question and then charge the applicable rates to get the withholding tax. So withholding tax question may not come on its own. It can also be included in a company income tax question with the total withholding tax company for a certain year of assessment. So after computing the company income tax, the total tax liability for the company, what are you expected to do? Even if you are not asked in the requirement, what are you expected to do? Use the withholding tax credit to reduce the total tax liability of the company for that given year. I hope you understand that. So let's move on to exercise 2. We have Adebola Nigeria Limited has been trading for many years. Okay, so the company makes up its account to 31st December annually. The extract from its statement of comprehensive income for the years ended 31st December 2018 and 2019 as adjusted for tax purposes are as follows. So we have year 2019 and then we have year 2018 in our table. Looking at the table, then we are giving various sources of income by Adebola Nigeria Limited. We have trading profits, we have bank interest received. Okay, I have a question here. It says, are we going to be giving the various withholding tax rates? No, you won't be giving the various withholding tax rates. You're expected to know them. They are not difficult. They are not difficult. Okay, let me just look at, you can see the table given to you here. They are not difficult. Just know the various incomes, okay, and the rate for both companies and individuals. They are not difficult to know, okay. You can study the material after the class. They are not difficult, okay. So let's continue. For Adebola Nigeria Limited, okay, we have the various sources of income. We have bank interest received. In bracket, they specify that this interest received is what the gross amount. Then for debenture interest received is also the word gross amount. Then we have dividends received from Adesemowo Limited, which is net. So which means that Adebola received dividend from another what company, okay? And the amount received is what the net amount. So since it's dividend, dividend is already a source of income you can charge withholding tax on. So it means that what this Adesemo Limited have deducted withholding tax, and then the net amount was paid to Adebola Nigeria Limited for the 2 years respectively, which is 2019 or 2018. The last source of income, which is dividend paid towards shareholders, that was a gross amount. So we have required, what is we expected to do? Compute the company's tax, okay, for the relevant years of assessment, ignore capital allowances, and determine the net withholding tax payable or receivable by Adebola Nigeria Limited, arising from dividends paid and received. Okay, sorry about that. So let's look at the solution we have. We have Adebola Nigeria Limited, okay? So the first requirement, they're expected to what? Compute the company's tax liability for the relevant year of assessment. And they told us to what? Ignore capital allowances. So looking at the question, how do we calculate the company tax liability for the relevant years of assessment? 2 years given to us. We have 2019 and we have what 2018. So what it means is that we need to look at all the income that we received by the Nigerian Limited for different years. So the first question you can say about trading profits. So the trading profits for the company income tax chargeable on simple, we have what 2019 and 2018. 2018 we have what 10 million. Then bank interest is source of income. Yes. They mentioned that the bank interest received is a gross amount. So we have 2,400,000 and we have 1,600,000. That's how we arrive at those figures there. Okay. Then another source of income is what debenture interest received. The amount received is what gross amount. What's the amount? 800,000 naira each. So these three sources of incomes, the trading profit, the bank interest received, the debenture interest received, will give us the total income received by what? The total income received by the company Adebola Nigeria Limited in 2019 and in 2018. So by the time we add the total of both. We'll have our total profits record assessable profits. And for company income tax is at the rate of what 30% of what assessable profits. So I think I want to throw more light on for based on your exam for taxation this. So when I know someone will say we are seeing 2019 and we are seeing 2018, what tax rate are we expected to use? Are we expected to use the new rates in the Finance Act, okay, and all that? So what I want to say, if you're giving question animation, okay, if the is before 2020, kindly use the word old tax rates. Okay, you have to use the word old tax rates. But for instance, if it's value added tax, value added tax was implemented immediately. Value added tax became effective from February 2020. So if you are given a question and you're given a current year, let's say the month is in 2020, like March 2020, for instance, and they're asking for the value added tax on a specific income, please use the current rate, which is 7.5%. To make it easier for you, for your solution, you can just go ahead to state it. Okay, the beginning of your solution. The value added tax rate used here is 7.5%, which is the current rate that was effective from February 2020. But most likely, I'm not saying 100% certain, most of the questions they will give you are from previous year. Okay, we are in 2020. All right. So look out for questions that get to affect your current rate. But we are expecting that before exams, which is next week, we are likely to get information because we have taxation around that. So a lot of students are getting confused on the rates. Yeah, I know that the current tax rates when it comes to okay, I have a question here on current. Okay, let me go through the question. You say, please, what are the current rates? Okay, you can just jot that down. For the current rates for a small company, the current rate is if the company's income is 25 million naira or less. If the company's income is 25 million naira or less, the current tax rate is 0%. So what it means is that any company making an income, please notice an income, which is a profit, making a profit of 25 million naira and less, pays a tax of what new tax liability. However, that company has to be paying what value added tax on a monthly basis towards FIROS. Do you understand? But for company income tax, which is CIT, they will not remit anything towards FIROS. Towards FRS. Then we have what we call the median company rates. For the new finance bill, okay, in the new finance bill, it was separated. We have the small companies, we have the medium companies, okay, and then we have the large companies. So small companies falls under companies that their profits are from 25 million naira. Okay, their gross turnover, sorry, I keep saying profits, I mean their gross turnover, the income generated by that company in a given year, okay, is 25 million and less, 25 million and below, okay. That's for small company. But for a medium company, if their income is greater than 25 million, which is 25 million to 100 million. So for medium company, we have a scale of 25 million to 100 million. If the total gross turnover generated by the company is between 25 million to 100 million, they are expected to pay company income tax of 20%. Okay, 20%. That's the rate for that. Then for education tax is still the same. Education tax is charged on 2% of what assessable profit. So let's go back to our question. Looking at these three sources of income we've been able to identify, the company income tax is 30% of the assessable profit. So for 2019, it's 30% on 17,200,000. For 2018 is 30% of what? 12,400,000. So you arrive at 3,720,000 naira. Then another thing to note here, if you are given a question in an exam condition, if you are given company income tax, and just like this question, you're expected to compute the company income tax, whether you are asked or what not. You can see in this question, we're not asked for education tax rate 30%. The next thing to do, also charge 2% of your accessible education tax, because in practice, when you're doing your tax data computation for every organization, your company income tax will show education tax, the total liability. So every question, when you're asked to total tax liability, that includes the company tax and the education, the total tax liability of a company in the requirement. It says determine the net withholding tax payable or receipts paid and received. Right. Let's look at the solution. They say we should arrive at what? The withholding tax was payable or received. So we should calculate the withholding tax that has been payable by Adebola, and the withholding tax received by what? Adebola. So we have B, net withholding tax payable or receivable by what? Adebola Nigeria Limited. Also in your taxation exam, you'll be required to what? To show your workings. The essence of showing your workings is for your marker to have an idea, to know how you arrived at your various figures. So we have 2019 and we have 2018. So gross dividends received, okay, for 2019, we have our gross dividends received. Let's look at our gross dividends received. A dividend was received by from another company, okay, and the amount received was a net of 720,000 naira. And you know, if we receive a net of 720,000 naira, it says it's a company, it means that they would have charged withholding tax rate of 10%, right? So if we are to calculate withholding tax payable or receivable, we have to gross up the amount. 720,000 was the net amount. If we are grossing it up, we have to gross it up to 100%. And to gross it up, we have 720 times 100 over 90, which will give us 800,000 naira for 2019. And that amount is the same with the amount in 2018, which is also 800,000 naira. Then secondly, we'll look at withholding tax receivable. What's the withholding tax receivable? Okay, let's go to the question. Withholding tax receivable. Debenture interest received, the gross is 800,000 naira. If you notice, the debenture received is gross. So we do not need to gross this amount again. The figure given to us is 800,000 naira. So here we'll just charge withholding tax directly on it. Withholding tax on 800,000 naira was 10% of it is what 80,000 naira for both years because it's the same amount. Then we have withholding tax on dividends paid. They mentioned that Adebola Limited paid us withholding tax to shareholders, and the amount is gross amount. So we have to also calculate withholding tax on this amount. For 2019, we have 6 million. For 2018, we have 4 million. So by the time we go here, we'll calculate 10% on 6 million and 10% on 4 million. So this 2019 will give you 600,000, 2018 will give you what 400,000. So the net withholding tax payable on dividends paid less withholding tax was receivable. So if what's the net withholding tax payable or receivable? So what Adebola Limited will do is that Adebola Limited will calculate the withholding tax that they received and the withholding tax that they are to pay. The net amount is what will be payable, is what will be what's payable to the relevant tax authority. So the withholding tax on dividend paid for 20 they pay to their share then or 2019 and for 320 all for withholding tax. Okay, so I want to talk about just briefly talk about, we can also see a question on withholding tax and value-added tax. They can ask you for the what to itemize the differences between both form of taxation, okay, for withholding tax or value-added tax. So let me just say briefly for value-added tax, okay. Value-added tax, you can jot that down. For value-added tax is an indirect tax, but withholding tax is a direct tax because withholding tax is charged on sources of income. Okay, withholding tax is charged on sources of what? Income. Okay, but value-added tax is charged on consumption of goods and services. So that's one difference. Secondly, another difference for value-added tax is imposed on goods and services, but withholding tax is imposed on incomes at source. Okay, for value-added tax current rate is 7.5%. The previous rate was 5%. But for withholding tax, the rate applicable is dependent on the type of transaction. The rate applicable is dependent on the type of what? Transaction. Okay. That's for withholding tax. Then for value-added tax is backed by VAT Act 2004, but withholding tax is backed by Company Income Tax Act 2004. Okay, 2011, sorry. For value-added tax is governed only by FRS because VAT is paid directly towards FRS. But withholding tax is different. Withholding tax is governed by both the State Internal Revenue Service. If it's individuals, you pay withholding tax to the State Internal Revenue Service. The residence of the company on the individual, that's what you remit withholding tax to. But if it's a company, you remit towards Federal Inland Revenue Service. But for VAT, the tax authority is FRS. The another difference is that VAT is shared by the 3 tiers of government. VAT is usually shared between the federal government, the state government, and the local government. The total value-added tax, the value-added tax is shared by the 3 tiers of government. But for withholding tax is not shared by the 3 tiers of government. So those are the major differences between value-added tax and withholding tax. Okay, so let's move to the next topic, which is luxury tax. Luxury tax is one of the topics that was introduced. Okay, and it's quite easy to understand. Very easy to understand. So you can also see this in your either section A or your section B. Okay, so it's important for you to please, I will advise you read through. For those that are just joining us for the first time, please try and go through the basics and for those that didn't join us on time. Okay, for Nigerian tax policy 2017. Okay, important to know these topics. Okay, another additions to this new tax syllabus. Okay, you could see those questions in your section 20. Then another point to note, please. I think a student or two, a student made that mistake while writing it November 2019 tax examination. Okay, making he got to the exam hall, it's cheap. So what he did first and foremost, he just read through the question and then marked the answers on his own booklets. And then immediately he was through with that, he proceeded to section B and tried to attempt the 4 questions out of 6 questions. So by the time he was through with that, he didn't even remember that he had not transferred the answers of section A to his answer booklet. So it was when they asked them to stand up in the exam hall. I can procedure, you stand up and then you would have signed out so they can collect your script. So that's when he was going through his answer booklet and then he realized that he did not put down the answer of section A, but by then it was already too late. So I think when the result came out, he had about 46 just for section B. So imagine if he had written at least 20 to be able to get from please note once you get your answer booklet, please write your options, write your answers, bring your answer booklet immediately, because you may not have time due to the pressure to go through it again. So you can just write it down. Even if you're not sure of the answer, you can leave the space blank. After, when you're through with other questions, you can now go back to it and attempt it again. But please, 20 marks, very easy for you to get 20 marks in that section A. And then you know what is left is at least 40 marks from your section B. All right. So our next topic is luxury tax. Our next topic is luxury tax. What is luxury tax? Okay. So basically, luxury tax is a tax that is imposed on goods and services. So luxury tax is imposed on goods and services that are considered by government to be luxury goods and services. One would say luxury that are non-essential services. As individuals, we can live. Okay. Essential services, food, they are basics, essential needs of an individual. Okay, but for luxury goods and services, there are those goods and services that are not considered to be essential by government, and they are consumed by mostly the rich and wealthy class of the society. Essential goods and services are consumed by both the rich, the middle class, and the poor. But for non-essential service, but for okay, but for non-essential services, okay, they are consumed only by the rich and the wealthy class of the society. All right. So by implication, what it means is that luxury tax is basically their target. The reason why this luxury tax was actually introduced, the target is for the super rich people, because they believe that the super rich people, those that are super rich, are more likely to purchase more expensive items. So goods and services are classified as luxury are usually assessed to tax as a percentage of the sales price, but likely at a higher percentage than the regular sales tax or value added tax. So currently all around the world, luxury tax are presently levied in some countries all around the world, okay, like Australia, India, Indonesia, Switzerland, Ireland, Turkey, Egypt, Tunisia, Okay, so these are the countries that has what that also was involved in this form of taxation. Yes. So it started from when we had a former Jonathan. Okay, he introduced luxury tax in taxation. It started in August 2014. Okay, by then federal governments announced their plans to introduce this tax, and their target was on the what reach. The focus was on what on charging luxury tax on goods that are what the part of these goods are what private jets, charging luxury tax on private jets, charging luxury tax on yachts, okay, luxury cars, business class or first class tickets on airplanes, champagnes, wines and spirits, and residential mansions in FCT Abuja. So under President Goodluck Jonathan's regime, this category of goods or services classified as what luxury items and tasked to be what implementation of this tax was some spending because the controversy generated. We all know that the form of taxation, especially the ones politicians, and this form of taxation costs a lot of and the federal the former Minister of Finance, President of Mrs. Kemi Adeosun, during a network issues. I sincerely apologize for that. So let's continue. Like I mentioned, I said Minister of Finance then, in person of Mrs. Kemi Adeosun, also reactivated the luxury tax that was first introduced by Goodluck Jonathan, okay, and then she said that they affected goods and services and their rates, but surprisingly, the goods and services were not stated then. So the minister did say that the proposed luxury tax will not affect basic food items because basic items are what essentials, okay. But however, in August 2017, during a Facebook Live video, okay, tags Tax Thursday, they having a discussion with Mrs. Adeosun then. So she explained that she went further to explain on government plans on what luxury tax. So the proposed tax will be on the following items. She stated them: first class tickets on airline travels, luxury coaches, luxury goods on that. For luxury goods, we have champagnes, brandy, whiskey, wine, jewelries, and high-end jewelries. Then she also went further to specify the applicable rates. Now, in respect to the policy trust of Goodluck Jonathan regime then, so the rates as at 2014 was to charge 10% import surcharge on new private jets, 39% import surcharge on luxury yachts, 5% import surcharge on luxury cars, undisclosed surcharge on business and first class airplane tickets, 3% luxury surcharge on champagnes, wines, and spirits. And then for properties in FCT, which is FCT Abuja, for on residential properties, any residential properties valued at 300 million and above is expected to pay a rate of about 1% as luxury tax to governments. So this was all that's been discussed. As this that's what Kemi Adeosun. These rates are still the rates of
the rate introduced during Goodluck Jonathan's regime. So luxury tax can come in your section A, okay, or your section B. Please note the first government introduced it, which was the Goodluck Jonathan's regime, and that was in 2014. Then Kemi Adeosun also talked about it in August 2018. Okay, try and know the various relevant goods and services that are classified as what that you can charge luxury tax on. Then also know the what applicable rates, like I've mentioned previously. Are there benefits of luxury goods? Yes, there are benefits. What are the basic what benefits? One is to raise government revenue. Like I mentioned before, all tax, their main focus is to generate generate revenue for government. So to raise government revenue, we know that especially in Nigeria, where we have a lot of billionaires and millionaires, those that purchased, all over the Nigerians have the highest rates of number of what private jets. I think is in Africa. Okay, I'm not so certain of, I do not know that for fact, okay? So considering the number of private jets owned by individuals in this country, imagine the amounts of tax that government will be able to generate from these owners of private jets. So with over 100 billionaires, more than 100,000 multi-millionaires, and the highest number of world's, yes, Nigeria has the highest number of world's private jet owners in the countries, coupled with the wealth of people in general. So you can imagine the annual revenue that will be generated by federal government. So this will be a very great source of income to federal government. Another benefit, okay, is to broaden the tax base, okay? We already know that the non-oil sector is expected to be broadened with the introduction of luxury tax. So taxation is, they are now focusing on deriving tax from other sources, okay, other than the oil sector. Okay, for non-oil sector, these are goods that are usually consumed by the rich in our country. Okay, so revenue generated from the oil sector has actually declined since 2013, especially currently. Okay, so they are not generating as much revenue as before. So this is a non-oil sector that the government can broaden their tax base. And this has made it the luxury tax is one of such non-oil sources. Then another benefit is the redistribution of wealth from the rich to the poor. The tax generated from this source of income is expected to be used to provide social amenities to the population. I hope nobody will ask me that the tax that government has been generating so far, how many social amenities has they been able to generate? Me too. If you ask me, now who I go ask? Nobody. So what is expected is that as a taxpayer, ensure you remit unnecessary tax to the relevant tax authority. So a way of back to luxury tax, a way of redistributing wealth from the rich to the poor. The tax generated from this source is expected to be used to provide. Okay, I just saw a chat. It says I was about asking the same question anyway. If you ask me, now I go ask. On a quarterly basis, the FRS announced the total revenue they've generated for government, okay, on a regular basis. We keep hearing millions of naira, billions of naira. However, the government should be able to tell us on how they spend. Nigeria has, I read it a few days ago that IMF we going to take over the economy because the loans that has been the loans during Goodluck Jonathan's time that was obtained by Nigeria was about 9 billion, but now in Buhari's regime we already have 20-something billion naira. So sorry, and this amount is in dollar, not even in naira. So the debt rate of Nigeria is increasing in fact, so the revenue that is being generated, I truly do not know what they use the money for. which is what the government is basically telling us is that even the revenue generated is still not enough to provide the social amenities that they now go out towards source towards look for what loans and borrow these loans towards carry out various projects. If you ask me again, now who I go ask, I don't know. So let's go on. The last benefit of what luxury goods is that it helps to mitigate the consumption of non-essential goods and services. The full implementation of this tax may likely curb the penchant for the consumption of extremely non-essential items in the long run. So what it means is that when most wealthy individuals know the high rate of tax that will be charged based on this, for instance, you have a private jet, you know the amounts that you'll be paying as what form of taxation towards government, you may end up not going for the option of buying a private jets. So this tends to curb the rate for the consumption of extremely non-essential items in the long run. But we know Nigerians, I pray more private jets on a daily basis. So the habit of the consumption of the item as well as the elasticity demand for the product may also determine the quantity to be purchased. Okay, so this is the end of our class for today. We've successfully looked at withholding tax and luxury tax. All right, so I think the last class will be on Saturday, which is this Saturday. Okay, so if you have any questions, kindly send your questions. I'll attend to them. I'll attend to them immediately. Okay, let me just give about 3 minutes for questions to be asked. Ask your questions. Your exam is next week. Ask your questions. If you have any question that is not relating to this current topic, you have my number already. Let me call my number again. 081-866-53263. So you can call me and ask me your questions or you chat to me. Okay. Okay, yes, notes to be shared to the group. So you get the notes. You get the notes. Any other question, please? Okay, my number again, 081-866-53263. Okay, we don't have any other question. We don't have any other question. So just call me or chat me or I'll attend to you immediately. Thank you very much. Have a good evening. Bye.